there, this is James and you're watching Tixee Live, and a very good afternoon to all of you. Now, in this episode, obviously, I just want to do a bit of a recap of what happened, just over an hour ago in related to the US job data, and have a little chat about, maybe how the market is feeling about this data release. But before we get into that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand for entering any trade. With that out of the way, let's get started. Okay, so basically, I asked the question during the watch along whether or not this would prove that Powell was right about a strong US labor market, because like I said previously, all he says, he keeps going on about obviously his fight against inflation terminator, that's what I call him, and he says that the US economy can handle the rapid or aggressive increases of interest rates down to the fact that we have a strong labor market. So I did ask a question. I did ask the question earlier on during the watch along whether or not he was right or not. Because I said earlier on, I started seeing a bit of a decline. Turns out, for the time being, he was right, because the NFP was announced a lot higher at 372,000 versus 268,000 expected. A lot better number than expected. So that's actually a very solid job report. As well as that, unemployment was announced at 3.6%, as they expected, so no increase in unemployment, and average earnings came in at 5.1%, slightly down from the consensus, or one of the consensus which said 5.2, but not dramatically to get worried about. So yeah, this is very good job data, indeed. So the question is, on the back of this good job data, will we have a lot more hawkish talk? And the chances are we will do. So, like I said, don't forget, in the last episode, the watch along, I said that both Bullard and what was the other name of the other chap? I've forgotten now. Anyway, two members of the Fed were hawkish, and they backed 75 basic point hike at the end of this month. So yeah, we are expecting to have a lot more hawkish talk on the back of this improved job data. The other thing as well is, now there's more bets on the table for the rate hike we are going to get end of the month is going to be 75 basic points. So now the market is really going to be assuming it was 75. Previously, they were umming and ahhing whether it would be 50 or will it be 75. On the back of this data now, bets are being made that it will be 75 basic points. So anyway, the US has just opened. Let's have a quick look, see how the market is feeling after this job data. Okay, so first of all, this is the US dollar, Japanese yen. Okay, as you can see on the back of the announcement, here it is here, the dollar gained awful lot of strength. It actually went up to 1.3653 was the high. Yeah, we are seeing a bit of selling now, but on the back of this data, the dollar gained strength against the yen. Against the euro is having a torrid time, don't forget. The euro came under pressure. We've seen a little bit of buying back, which is usual when the markets digest this information. So currently trading at 1.0176. The cable, again, a little bit of buying back. It came under pressure initially, but it's had a bit of buying back now, and it's testing that level I've been watching for a while at 120.034. Gold, you probably guess what's happened in gold as well. It came under pressure initially, but it's still pre-range bound. It's currently trading at $1,739. Let's have a look at the markets, how the stock market's doing. S&P 500, okay, did actually have a knee-jerk reaction on that data where it did come under pressure, but seeing a little bit of buyback. And hopefully, this is some good news for a change for the S&P. If it can close out today slightly higher, that would be 4 days of gains, which will be quite something for the S&P 500, because it's been under an awful lot of pressure for quite a while. So ending a good week for the S&P 500. So yeah, that's how the market is reacting currently as it stands. So anyways, that's the NFP. Good solid job data. So we'll have to see now how more hawkish talk comes out and what the impact that's going to have on the market. But I want to have a quick chat about this week. Because what a week we have had. It's been a hell of a week. First of all, let's go through step by step what's happened this week. First of all, we had a teeny weeny bit of optimism in the market when there was news that Biden was discussing or thinking about cutting tariffs with China, improving business relationships. So on the back of that, the market got a little bit of optimism because the two strongest economies looked like they were beginning to work together. But then that soon crashed. Because the dreaded recession word came back in. And one of the most dramatic crashes I've ever seen in my life, okay, was the euro dollar, where it actually crashed to a 20-year low, and that's a level I've never seen. I've been in the industry for 16 years, so it's trading at a level I've never witnessed. So yeah, that's a good thing. So that's one of the things. And now, of course, the question is, when will the euro get to parity with the US dollar? And it's getting closer and closer to parity against the US dollar. What else did we see? We saw an awful lot of dollar strength, obviously, because of the risk aversion or risk appetite. So we saw an awful lot of that as well. This FOMC did its minutes where they hinted at more restrictive rates, and they mentioned that most members were happy with either a 50 or a 75 basic point rate hike, and they referenced inflation 90 times, 90. Then what happened? Then we had Boris Johnson. I had to talk about him for 2 days. Yes, he had about over 30 officials resigned in one day, and then he refused to resign. But eventually, he decided he would do the right thing, and he has indeed resigned. That gave a little bit of pressure to the cable, but the cable or the sterling dollar, this real pressure was down to the fact of dollar strength. So the market paid a little attention to that, but not an awful lot. But yeah, eventually he decided he will indeed step away. And then, of course, obviously, we have the NFP today. So it's been a hell of a week, lots of stories going on, lots of events. But here's the thing. We got another week coming up of more events. Next week, we have Bank of England's Governor Bailey speaking, okay? UK GDP, Germany CPI, US CPI, Canadian interest rate decision, US retail sales, and Michigan consumer sentiment. The main one I'm going to be watching, of course, if you guessed it, have a guess. It's going to be US CPI. That is going to be huge. And I might see if I can do a watch along with that event if it's possible. But that's going to be a big event. US CPI. As well as that, next week, don't forget, we have earnings season begins on the 15th of July. And those of you who are kind enough to join me this morning know I discussed how this is sort of scaring the market a little bit. But of course, I'll talk a bit more about that next week as we get closer to the 15th of July. As the market stand, FTSE is currently negative 0.11%. DAX currently trading at 0.70% higher, slightly higher. Euro stocks currently trading at 0.00%, so no change with Euro stock 50 at the moment. Well, that's it. It's been a hell of a week. As I always say, this time of the day, I'm exhausted, but I'm excited at the same time. But next week, I'm really excited about the US CPI, because I really think that could be potentially a massive event. So I'll be watching that very, very closely. Don't forget, you can always ask me questions whenever I'm online. With this is Tixee Live. That's what it's there for. So feel free to ask me questions anytime you like, or just simply say hello. All that. So if there's no questions, okay, don't forget as well, you can actually leave a question in the comments if you think about something later, and I will see it and I will reply to it next time I go live. On that note, if you're watching me on Facebook, as I always say, if you like it, give us a follow. If you're watching me on YouTube and you like it, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this little episode, found it useful and interesting, and you've put up with me, because a lot of people struggle to put up with me, understandably. Give me one of these. It's nice to know that the videos I do is being liked. On that note, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be treated as financial advice. I always suggest you do your own research, do your own diligence, and of course, there are the risks at hand before entering any trade. On that note, every single one of you have a fantastic weekend, and every single one of you trade safe.